Okay, so to summarize what we did yesterday, we said that costs that are incurred creating internally generated assets are split between research costs, which are always expensed, and then development costs. And then development costs, we can capitalize it if all 6 development recognition criteria are met. If any of the 6 criteria are not met, then that cost will have to be expensed. Okay. So let us just quickly go through it and look at what costs related to development costs can be capitalized. We can only capitalize directly attributable costs. Those are costs that are attributable to creating, producing, and preparing the asset, and costs that are necessary to be able to that are incurred to be able to operate the asset in the manner intended by management. Okay, so examples of those directly attributable costs: costs of materials, services, and professional fees, and employee benefits were necessary in the creation of that intangible asset. All right, cost of materials, services, professional fees, employee benefits. When we talk about employee benefits, we might think of salaries and wages of the personnel that are involved in the creation of that intangible assets. We may also capitalize amortization costs. This is the amortizations of patents or licenses that have been produced or that have been used to create the new intangible asset. So you might have an old intangible asset that is that you had capitalized previously and you amortized it, and that intangible asset is used to create another intangible asset. Those amortization expenses can be eligible for capitalization, or they are considered a directly attributable cost. Borrowing costs associated with the creation of the intangible asset, provided that they meet the recognition criteria. So as I mentioned before, borrowing. So please mute your mic. Please mute your mic. Okay. I repeat, borrowing costs as well may be included. So these are things, costs, interest charges on loans that may have been used to acquire that intangible asset. But one important thing to note is that you may not really encounter borrowing costs much in this course, because borrowing costs is dealt by the standard IAS 23 borrowing costs, and we will not really be going through that standard. It's not part of your syllabus. What are costs that are excluded from capitalization? These are selling, administrative, and other general overheads. So this is just like PPE. Costs due to identified inefficiencies occurring before the asset reaches its planned performance level. All right. So because let us say your output or so is low, then you have expenses that are incurred, or you incur losses. Those ones are not included. Initial operating losses are not included in the capitalization of an income. Staff training costs are always excluded. Staff training costs are always excluded from capitalization. Now, what happens to these costs that are excluded? These costs must always be expensed. Okay. You might have a situation where costs were incurred in a prior period when the recognition criteria were not met. So with this here, we're talking about the development of an intangible asset, internally generated intangible asset. So you might have experienced, or you might have incurred some costs. So let us say these costs did not meet part of the criteria and they were not recognized. Now, since these costs were expensed previously, they will be expensed in future because they never met the recognition criteria before. So something like a research expense can never be capitalized. A development expense that did not meet the criteria previously and maybe in the current period now meets the criteria, it should be expensed. Okay, so let us deal with this example, grouping up. Example 9, page 484. Page 484. I will share my screen so that we can do the example together. Okay, I believe you can see my screen. Let me go to the proper page, page 484. Okay, I went too far down now. Okay, so this is the example that we're dealing with. Example number 9, research and development costs. Research and development costs. Lab Limited began researching and developing a wireless modem, one which truly did not have any wires, something they planned to call the less wire wireless. The following is a summary of the costs incurred by the Research and Development Department each year. So you have 3 years, 20x1, 20x2, and 20x3. Then you have R&D costs. R&D just means research and development. In 20x1, your cost was 180,000. 20x2, your cost was 100,000. And your 20x3 cost was 80,000. Okay. I believe that is fine. So we're given additional information. The costs listed above were incurred evenly throughout the year. What does that part mean? The costs were incurred evenly throughout the year. Can someone help me to explain that part? The costs were incurred evenly throughout the year?
I think that they had the same cost throughout the year and it did not change.
Okay, so what does it mean for a monthly basis?
I think you divide
Yeah,
I think
go
you
ahead.
divide the total sum for the year by 12 months to get the even costs per month.
Exactly, 100% correct. So the cost will remain the same each and every month. Okay. Included in the costs incurred in 20x1 are administrative costs of 60,000 that are considered to be directly attributable to the research and development process. Okay, sorry, that are not considered to be directly attributed to the research and development process. It's very important. If you miss one word, then it will change your answer. Okay, so 60,000 are not considered to be directly attributable to the research and development process. The first 2 months of the year were dedicated to research, and development began from 1st of March 20x1, but all 6 recognition criteria for capitalization of development costs were only met on 1st April 20x1. Okay, I just want to stop there. And we will deal with 20x1 first. Okay. So 20x1, this company incurred costs of 180,000. Looking at the information, can we capitalize the 180,000? How will we treat the costs for 20x1? How will we treat the costs in 20x1? Does anyone have an opinion? This is the learning process, so we're learning together. You can try, I don't have to give you the answer. What can happen here? I will give you 1 minute. Okay, 2 minutes, I'll give you 1 minute, 2 minutes. I'll give you 2 minutes to do this, and then I will ask for an answer. What happens to 20 in 20x1? Okay, do you have an answer for me? How much is going to be capitalized? How much is going to be expensed in 20x1? Can we capitalize the whole 180,000 in 20x1?
No.
Okay. So how much are we going to capitalize and how much will be expensed in 20x1?
Okay, sir, I think that administrative costs will be expensed, research will be capitalized, and development will be expensed.
Okay, but then
Should I say
the amounts that are involved?
Okay, admin is administrative cost is expensed with 60,000. Research is capitalized with 20,000, and development cost is expensed with 100,000.
Okay, so let us look at this. One thing that you said 60,000 administrative costs is expense, research of 20,000 you said should be capitalized, and development costs of, what was it, 100,000 should be expensed. That's what you said. Okay, so I just want to go through something. There's a mix-up somewhere. Research costs are always expensed. Research costs are always expensed, and development costs are capitalized if they meet the 6 criteria. So maybe you just mixed up the two. So just note that research expenses can never be capitalized, but development costs can be capitalized if the 6 recognition criteria are met. And so let us look at this. Let us look at this question for 20x1. Okay. And see, so our total cost was 100,000. All right, our total cost was not 100,000. Our total cost was 180,000. Right, But of those costs, of those research and development costs, 60,000 were considered administrative expenses. So we know automatically that the 60,000 should be expensed. All right. And that's why the journal entry, you're going to debit your administration expense with the 60,000. That one is straightforward. But now let us go back to the remaining. You will have a situation. Let me just open this for you just so that you can see the workings. So you have your total costs. Your total costs were 180,000. So we're going to less our admin costs, which we know these are research costs, which will be expense, that is 60,000. So our remaining research and development costs, were okay. That's the remaining balance of the research and development costs. Are we together?
Yes, sir.
Now, what are the monthly costs? The monthly costs will just take that divided by 12. Monthly, it would be 10,000. Okay, monthly would be 10,000. That is just 120,000 divided by 12. Okay, let us do this. Okay, so we have 10,000 in monthly expenses, and we know that these expenses were incurred evenly throughout the year. Now let us go back to our theory and see our question and see what it states. It tells us that the first 2 months of the year were dedicated to research. The first 2 months of the year were dedicated to research. This question asks us to show the journals related to the costs incurred for the year ended 31 December. So if the first 2 months of the year are dedicated to research, that's January and February would be dedicated to research. Are we together?
Yes.
Okay, so then what we can do, we have our research, just say Jan and February. The amount will be 10,000 times 2, which would be 20,000. That 20,000 is going to be expensed because it's a research cost. Okay, so that one is clearly expensed. Maybe I can just put like that. 10,000 times 2. Okay, that one is expensed, and that is straightforward. Then let us go and read our next sentence. Development began from 1st of March 20x1, but all 6 recognition criteria for development costs were only met on 1st of April. All right. So when they began the development on 1st of March, it didn't meet the criteria for capitalization. So if that doesn't meet the criteria for capitalization, it means that development cost has to be expensed. So and then we have a development expense. This is for the month of March. That is 10,000, and that is expensed. Right? And then lastly, it says development costs began on 1st of March, but all 6 recognition criteria for capitalization of development costs were only met on 1st of April. So from 1st of April, those costs can now be capitalized because the recognition criteria for capitalization were met. So from April up to December, we can capitalize those costs. Okay, then we have our development. Okay, capitalized. would be April to December. April to December is 12 months, is 9 months, right? Let me just put that there. And this amount is capitalized. Okay, so this is what happens. Now, let us just look at how the journal looks like. This figures 20,000, 10,000, and 90,000. That gives us the 120,000. So that gives us that 120,000 research and development costs. The 60,000 we already knew were expensed anyway. Okay, so look at our journal entry. We credited our bank a liability with 180,000 that we paid for the research and development costs, but some of the costs are capitalized and some are expensed. Now, it is important for you to show in your journals whether it's an asset or it's an expense. Now, for us, the way we do it, we say you should put, we use SFP if it's an asset, it appears in the statement of financial position, or SPL if it's an expense, it appears in the statement of profit or loss. So our administration expense is an expense, so we would put administration expense, SPL, 60,000. That one is expense. Research expense, 20,000. All right. That again goes to the SPL, statement of profit or loss. Development expense, 10,000. That is expense to go to the statement of profit or loss. And then the rest of the development costs from April to December are capitalized. That would appear in the statement of financial position. I was marking some of your tests, and I noticed that some of you did not include the classification of accounts, whether it's SPL, SFP, or OCI, and the question clearly stated that you should. All right, so if you don't do that, you lose marks. Okay. Are there any questions with regard to this part? Okay. So that's for 20x1. What about 20x2? How much was incurred in 20x2? In 20x2, they incurred 100,000 worth of costs. 100,000 was incurred in 20x2. Let us read what happens in 20x2. Included in the costs incurred are administrative costs of 20,000 that are considered to be directly attributed to the research and development process. This 20,000 is considered to be directly attributable to the research and development process. What happens to those costs then? What happens to, so it's included in this 100,000. Can we capitalize this whole 100,000, or should we remove the 20,000 and expense the 20,000? In 20x2, what happens? Guys, let's be quick, please. What do you think? Yes, go ahead.
Capitalized.
Capitalized, why?
I think it's capitalized, sir.
Why do you think it's capitalized?
So because they say it's directly attributable.
It's directly attributable. We said if it's directly attributable, then it's no more capitalized. Okay, so you are 100% correct. So the full 100,000 is capitalized. We debit our development cost. We debit our development cost, our assets. So we'll say development cost, SFP, statement of financial position, debit 100,000, credit your bank if it was paid, or credit your creditor or supplier if it was on account. All right.
Sir?
Go ahead.
Sir? Can we separate the administrative cost from the development cost, and then we still just capitalize them? Like
Put
we
them,
write administrative cost, 20,000 in brackets SFP, and then we also write development cost in 80,000 in brackets SFP. Can we do that?
it's all part of development costs. It's all part of development costs, so just reflect it as development costs. You do not need to split it. All right, just
Okay.
include it as development costs. I think there's something in the chat. My teams were okay. Someone says I'm cutting out. I think it's your network because you're the only one who's mentioned that I'm cutting out. Sometimes I know when it's on campus, the network on campus is pretty bad. That's why when I teach online, I'm usually at home because I know the campus network is quite bad. Okay, let's look at the last one. 20x3. Included in costs of 20x3 are training costs that are considered to be directly attributed to the research and development process. In preparation for the completion of the development process, certain employees were trained on how to operate the assets. So let us look at 20x3. What was the total cost? The total cost for 20x3 was 80,000, but included in that 80,000 is 30,000 that was for training costs. Now what happens here? Can we capitalize the whole 80,000 or should we not capitalize the whole 80,000? Should we subtract the 30,000 and only capitalize 50,000? What happens here? So these training costs are considered directly attributed to the research and development process, and it tells us that in preparation for the completion of the development process, certain employees were trained on how to operate the asset. What do you think happens here?
The whole 80,000 is capitalized.
The whole 80,000 is capitalized. Why do you say that?
Because the training fees are directly attributed.
Okay, because the training fees are directly attributed. Does someone else have a different opinion or do you agree? You agree?
I agree.
Okay, is there anyone else who has a different opinion? Anyone with a different opinion? Or you all agree? It seems that you all have, you're all agreeing. Or someone wants to speak up. Sorry, I interrupted you. Go ahead. Someone wanted to chat. Can you go ahead? Okay, there's no one. One important thing to note about training costs, which we just went through, training costs are always excluded. Training costs are always excluded from capitalization. So costs that are excluded from capitalization, we have staff training costs. All right, we have staff training costs that are excluded. So the 30,000 isn't eligible for capitalization. The 30,000 should be expensed, and then the rest, the 50,000, would be given. Okay, so training.
Okay, sir.
Go ahead.
But then doesn't it say the training costs are what is it? Are
Attributable.
Yes.
Yes,
So
it
doesn't
says.
that mean that we should capitalize that because it says only capitalize directly attributable costs, or is it indirectly attributable?
Okay, so let us read there. Training costs are considered directly attributed to the research and development process. However, the standard goes on to further exclude. The standard goes to exclude training costs from capitalization. So you can think of it in this way. The directly attributable costs, we only have 3 costs that are included. Okay, let us say 4 costs. We have cost of materials, We have cost of services, cost of professional fees, and employee benefits expenses that are necessary in the creation of the intangible asset. Those are included. And then we have amortization of patents and licenses and borrowing costs. These costs are specifically included in, you can capitalize these costs, okay, if they're directly attributable. However, training costs are specifically excluded. I like to give this example, like let us look at PPE, for instance. Assuming you have a business, right? You have a business and you purchase a vehicle, right? So that vehicle is going to be used as a delivery vehicle. So now you have the vehicle in your possession, but for the first month, the vehicle is not used. And the reason that the vehicle is not used is because the driver that you have does not have a license. So you take him to driving school so that he can get a license, right? And so finally he gets the license, and after 1 month, then he utilizes the vehicle. Now,
So, sir?
Yes.
So even if it says selling cost, administration and administration and training costs are directly attributed, we exclude them because of the standard.
Yes, you have to look at what the standard is saying. You have to look at what the standard is saying. But then the important thing that you need to note is that, is it directly attributable to that intangible asset? All right. Is it directly attributable to that intangible asset? Was it incurred specifically for that intangible asset? Training costs will always be excluded. Training costs will always be excluded. Selling expenses will always be excluded. All right. Selling expenses will always be excluded. The thing that you have to look at is, normally what happens is that you have to look at capitalization. Normally stops when the asset is in a condition that is necessary for operation. All right. When it's necessary for operation, it's usually excluded. So the reason that trading costs are always excluded is because they say that the only reason you are incurring these costs is because you have, okay, how do I put it? Staff that are not equipped to deal with that. But if you had other employees, for instance, if you had other employees who were able to operate that intangible asset or so, then, or they had the necessary skills in developing that intangible asset, you wouldn't need to train them. So it's not a necessary cost in developing that intangible asset. All right. So the only reason that you incur those costs is because those employees did not have the requisite skills to develop that intangible assets, for instance. Okay. So that is why you would always exclude training costs. You would always exclude training costs. Okay. Are there other questions?
I understand now.
All right, great. Okay, this is the one that we were dealing with. So we're finished with this set of slides. We're finished with this. So what we learned here was what is meant by an internally generated intangible asset, as well as the difference between research and development costs and how we treat them. I want us to go to the next set of slides. I want us to go